Hey, good morning everyone. Welcome to the BidAsk YouTube channel. This is your host Sonali signing in. We had a massive move in the markets in the last 2 days. Yesterday, rupee moved to a high of 82.65 on the back of dollar shortages in the cash market, as well as the up move in dollar index that has been happening for the entire of this week. The whole issue is centered around the debt ceiling impasse, which is kind of going on and keeping the markets at tenterhooks. The other factors which are driving this move is the sharp pace of depreciation of the yuan, where it moved to 7.0650 odd levels. And apart from that, the dollar index, of course, has moved very, very sharply by about 2.5% in the last couple of days. So these three factors, which is dollar index, yuan depreciation, and surprisingly cash dollar shortages, at a time when the robust inflows in equities are keeping the equity markets in a very exuberant space, we still are facing cash dollar shortages. And one of the reasons cited for the same is a lot of buying that RBI has done to mop up these inflows. So that's what's kind of driving the move, and it's been a very sharp, fast-paced move, which always is the case. When rupee is in an appreciative trend, we see RBI coming and buying and giving a floor at every 25-30 paisa dips. But on the other side, when we start seeing sharp depreciation of the currency, we do see RBI coming and kind of smoothing the effect, but the move becomes much broader and bigger as compared to when the trend is on the other side. And of course, the stop loss driven moves kind of accentuate the move further. Looking from here, I think the weekend discussion around the debt ceiling in US is an important factor which will keep the markets a little wary on the risk front. But on the whole, I think given the sharp moves which have already happened in crosses, a further down move in crosses or perhaps an up move in dollar index very sharp from here is something we have to see if 103.80 is getting broken on the upside, which is a first level strong resistance for dollar index. My sense is 103.80 perhaps will get resisted in the first run up. And from there, we could see if markets get a feeler that debt ceiling issue is seemingly looking resolved, then at 103.80, we could see markets getting into a bit of a profit booking mode. On dollar rupee, I'm inclined to obviously add to my shorts here at these levels. While buying on the buying side, will keep the risk covered on near-term buy-side payables only by way of options at these levels and very short-term options. For the day, we don't really have any critical data, but we have expiry today. So till expiry, we would see a tight band of maybe 10 to 15 paisa. And of course, how yuan pans out for up till the mid-afternoon will also keep the pressure on and off on dollar rupee. For the time being, it's more of a buy on dips, what is likely to play out in the broader markets. For a strategic positioning, I think going short at these levels, slightly more longish tenor, is a more preferred play, and buying is only by way of options, as I said. Anything important you will hear back today, and have a great day ahead. This is your host Sonali signing off. Thank you.